Hey there, it's time for the show, the Tatiana Show, where you make friends and talk life and crypto. Hello, everybody, and welcome to the Tatiana Show. This is a special edition coming to you from World Crypto Con in Las Vegas, and I'm here with Bryan Katis from Trust Science. He's going to tell us a little bit about their decentralized project. Nice to meet you, Bryan. How are you enjoying the conference so far?
Great so far, thanks.
Cool. So what do you want to tell us about Trust Science? What are you guys working on?
Yeah, so we just announced earlier today the release of our white paper for Troo.io, TROO.io. So we're creating a blockchain-based consumer score. So taking the credit score that you get traditionally from FICO or Experian and evolving that into an overall trust score to be able to score people for things like lending or insurance or dating or other things like that.
I was going to say that for dating, that would be very helpful because you could be like, that guy was a real jerk, and then other girls will know.
Absolutely, that's the whole key thing. So we want to basically enable people to get access to services based on are they trustworthy at the end of the day.
So what happens when someone screwed up in life? Maybe they were younger, they messed up, and they want to, get a loan for their car. They're starting to build up their life. How do they deal with sort of bad credit score in a decentralized, immutable database? That sounds like a nightmare.
That's a good question.
Yeah, that's a great question. So we first start with an identity wallet where people volunteer and share various information, and then people stake and vouch them on that information. And because people are controlling that wallet, they can determine which information to share and which information not to share. So the idea is not to necessarily penalize people for not sharing certain things, but it's to really incent them to share information about themselves and for people to basically verify that and back them with their various claims that they do believe that these people are trustworthy enough that they are willing to pay back a loan or they have the willingness to do that.
So what do people do if they think someone's not trustworthy? Do they go to the website and they say this person is a scammer, or what happens?
So,
and why would you even believe them, right? Because maybe that person's making it up.
Yeah, so the idea is that you're basically going to share information and get people then to validate it. So ideally you're sharing information that is going to help you with getting access to a service or to a product. However, once you engage in that activity, if then you don't meet your obligations, then someone can come back and score you negatively. And the idea is that you don't want people to go and start creating many, many different IDs, that this ID will stick with them, and it should really encourage, their best behavior. But it won't always happen, right? You can only help them so much, but we really want to empower people to do their best.
Cool. What kind of technology are you guys using under the hood? Like, what kind of blockchain are you using?
So we've looked at a number of different technologies like Ethereum and others, and we're still evaluating exactly what we're going to do with our platform, and that'll be finalized in the next few weeks and months.
Excellent. You have any other questions, Josh?
No, it sounds pretty good. I like the idea of, in the old days you had a ring of trust and these sorts of things, and it's been part of the sort of cypherpunk or anonymous, the lead to privacy online, and this online world that we all live in it's not run by a state, is to how do we have trust, how do we have these things, and restaurants and hotels go with Yelp and these sort of centralized systems, but I do think if there's a protocol that would be pretty useful.
Absolutely, we think so too.
What are the shortcomings of the current system? Why does it need to be on the blockchain?
Yeah, so if you look at what happens today, it's mainly transactional information. It's only capturing about 0.5% of the information that's out there. So there's all this other information that's out there. Another benefit is when you look at things like smart contracts, and you want to be able to, an individual doesn't know where their information's going right now, right? You have the Googles and Facebooks that monetize your data, but you don't, as a user, consumer, I don't get to see any of that. And so the idea is if we empower the consumer to monetize their data, democratize it, then they're able to go and reap the benefits of that, and then they can determine who they're sharing information with, and the blockchain will capture all of that for them.
What if I'm a murderer or a rapist? Then I probably wouldn't register. Would I be captured by the system, though?
So this is something where people are opting in for it. And so if you're not necessarily, if you're living in a cabin or someplace in the middle of nowhere and you're off the grid, we're not actively looking to go and find people like that. It's more of where you're looking to go and get access to a product or service. And so you're going to want to share that information and kind of go from that angle. But we're not necessarily searching just randomly people to kind of go and say, it's not like what China, for example, is doing with their scoring. Exactly, and that's really much more where they're trying to blacklist people and do it for, I would say, much more negative reasons. We're trying to help with a better social impact and really empower people to give them the mechanism to increase their trust score to get access to these services. That's the whole intent.
Excellent, very cool. Where can people catch up with you and find out more?
So you can go to troo.io or my first name, bryan.katis at troo.io.
Excellent. Thanks so much. We'll send you a copy of this soon.
Awesome. Thank you.
Hello, everybody. It's Tatiana again at World CryptoCon with Sasha Hodder, and we're here talking to Henry James. He's the Deputy CEO and CSO of Fincross, and he started to tell us about our project. I thought you guys might want to learn about it too. So thanks for coming on the show today, Henry.
Thanks, guys. Yeah, Fincross is a digital investment bank, and our goal is really to bridge the traditional financial system with the crypto financial system. Today it's difficult really to get wide access into the market in both directions and to trade large volumes and get access to a decent amount of liquidity. So as an investment bank, we hope to be a large liquidity pool provider for the market, but also whether you are a retail investor, a private client, or an institutional investor, we have a license that's very unique that we can serve all of you guys, even down to a minimum deposit of $5,000.
What do you mean you can service people? Like, how does that work, and where is your licensure?
I'm fighting at the bits. This is exciting. So you can serve crypto clients across the world. You can move it from crypto into cash for them?
Yes. Yeah.
Where do they have to be? Do they have to be a citizen or anything like that, or can they be Americans?
They can be Americans. We have to comply with FATCA regulation, right? So as of January next year, we'll be able to onboard customers from around the world to invest into our own financial products, including a crypto index fund, but also our actively managed crypto trading fund. So if you want exposure to the market and not just buy and hold, you want to have a level of sophistication, a long-short strategy, we can do that through our funds. And we also, as an investment bank, we are feeder into other funds. So we are trying to identify the best crypto funds in the space so that we offer you our product, our solution, but we're also providing you a whole list of other great funds in the space. And so once you log into our customer platform, you're basically shopping. You can shop for the fund that's most of interest to you.
So when you say investment bank, they can't do any kind of retail banking then, like for a business it would only be if you're using it for an investment vehicle.
Basically, Fincross is broken down into 3 divisions: core banking, investment banking, and distributed banking. Within our core banking, you will actually have access to fiat and crypto accounts, right? So you will actually be able to do payments and transfers within crypto, not in fiat, but within crypto. Our investment banking division, yes, is more about products and asset services specific to the industry. If you are a trader who's looking at getting an edge in the market, we are selling AI trading tools as a software as a service. So the idea really is to give the user better insights into the market. So we have price prediction tools where we can we have a price prediction tool. We have a chaos and disorder prediction tool that is looking at the disorder that's happening within each exchange. So that's cool because then you can actually start seeing where movement in price in the crypto market is originating from. Is it?
So what goes into that prediction model? Where do you get the data from?
So that's the great thing about crypto. It's actually quite easy to obtain data within this sector, right? Because we can access free APIs to all of the exchanges, but also on the blockchain itself, it's all available to see online, right? So we can actually see what's happening on the blockchain in real time. So what we're using is AI to start predicting, what's likely to happen. And the AI isn't just producing one one outcome. We're not just saying, okay, we predict the market's going to do this. No, we say we have an AI that's predicting the likelihood of a price going up, and we also have a segregated, separate AI that's working what's the likelihood of it going down, and they don't communicate with each other. And so what we're then looking for is the bigger the spread between those two likelihoods is going to give the trader an opinion, an insight into which direction the market's going to go in. So let's put it this way, the trading tools are still to be used with human interaction, right? The human still needs to click the button and make his trade himself. But the idea, like I said, is to get better insight and have more edge when you're trading the market.
And are you from, where is it that the company is located again? What was the jurisdiction?
So we're incorporated and registered in Mauritius. It's an offshore island in the Indian Ocean. Mauritius is a financial center, has a lot of tier 1 banks based down there. They have been for many decades the main banking gateway for cash going in and out of Africa. So international banks have kind of found it difficult to work with African banks, whereas Mauritius has found a niche in kind of servicing that part of the world. And in addition to that, Mauritius has also most recently started to be a channel and a gateway for money moving from Asia into the West.
Well, what is the background of your team, actually? Because this sounds like a massive undertaking.
Sure. Well, like I said, my background is in trading currencies for the last 8 years. I launched my own FX fund in Mumbai in India in 2014, and that was really my entry into this project because my goal last year was to launch a crypto hedge fund. But when we were looking for jurisdictions to get the licensing to do this project, we came across Mauritius. We're lucky to have some great contacts over there that told us about Mauritius's positioning in creating this fintech legal framework specific for this industry, and we realized that would be a good jurisdiction to go and do business. It would be and allowing us to serve an international market. And then 3 weeks after I'd returned from Mauritius, I had a follow-up saying, hey, I think, from Mauritius, the guys in Mauritius that we'd met and saying, you guys should set up a crypto investment bank here in Mauritius, leveraging this fintech legal framework. That's how it came about.
What kind of information sharing with the rest of the world does Mauritius have? Do they participate in all of the, giving over all the data to the U.S. basically? Sure.
So Mauritius is a whitelisted OECD nation. So on that respect, Mauritius has tax treaties with many countries around the world. Sadly, not with the US, but in that regard, Mauritius has done a lot of work to make sure that it is really a hub for international business, specifically within financial services.
But does that mean that they're giving over all that information and sharing it? Is that what your question was?
Yeah, they have to. They have to. When you are working in banking, especially when it comes to US, like I said, you have to conform with FATCA checks. So every US customer that joins a bank has to go through a FATCA, and we have the responsibility of going back to the US saying this is the FATCA check on this customer. Basically, the US wants to see where foreign deposits are being made, and it's the responsibility of the bank itself to report that to the United States.
Cool. Well, where can people check you out, and where can they find out more about the project?
Fincross.com, and we have a whole bunch of social media channels at FincrossX, and please use our hashtag Fincross. We are launching pretty much a weekly vlog. You can check us out, what we're up to. On the screens behind you can see part of our journey, but you can find our YouTube channel, you'll see all of that.
What's planned for 2019?
2019 is to start doing business. Like I said, our first products will come online January 2019, and we also want to launch an ICO in February. We're doing a reverse ICO, so we've already done an equity round, 2 equity rounds this year, and now that we've got pretty much the whole business in place, we are continuing obviously to develop a lot of tech at the same time, and that will be happening on an ongoing basis. But we want to launch a 50-week ICO using a similar ICO model to EOS, so it'll be an auction model ICO strategy. So that's really a summary of what we're doing next.
Will you be blocking Americans like EOS did?
Sadly, yes. The US regs do not allow us to really sell to US investors.
I thought we were the land of the free.
Yeah.
I feel jealous.
It's sadly the way it goes, but having said that, let's put it this way, because we're running a 50-week ICO and we intend on listing our token on exchanges from hopefully mid next year at the latest, US investors that have accounts on these exchanges where our token is listed will be able to buy the token. And because we're doing an auction strategy, basically the secondary market, the exchanges will be arbitraging the price between the exchanges and the price that you can actually buy on our platform. So effectively, the point being is US investors should have an opportunity to get access to the token during the token sale itself, but through the secondary market as opposed to through us.
Excellent. Well, thanks very much. Everybody make sure to check out fincross.com. Thanks, Henry, for joining us today.
Thanks to you guys. Thank you.
Hi, everybody. This is Tatiana from The Tatiana Show, and I'm here with my special co-host, fill-in for Josh Scigala. I'm actually here with Sasha Hodder. We've been traveling for the past couple weeks, and we're here to talk to our friend, Chris from Equibit. But Sasha, maybe you should say hi first.
Hi, everyone. I'm glad to be filling in for Josh. I'm a little shorter, but excited to do the interview.
Cool. So, Chris, tell us a little bit about yourself and your company.
Well, I'm a chartered accountant by trade and was the CFO of the Canadian side of Peter Schiff's stock brokerage for a little while. And while I was there, in 2010, was inspired by Bitcoin to create an upgraded version of that kind of a protocol. But rather than do money, it would do securities. Being from the securities industry, naturally that's where I gravitated towards. And securities and money suffer from a lot of the same problems in terms of centralized infrastructure. With money, it's central banks and clearinghouses. But the securities industry is moving around intangible value too. And so we have transfer agents and central depositories, which perform basically the same function of registering the ownership of these things, doing settlements, routing communications from the issuers to the shareholders and back again if it's a vote, distributing earnings and dividends and interest payments. And so by running all of this activity through centralized institutions, you get a lot of inefficiencies. And so this system has a name for it. It's called street name registration, sometimes also indirect registration. And
I used to work as a trader and then also as a financial officer at the bank, and sometimes getting people's securities from one brokerage house to another would take like 3 months. It would be insane. They would lose all the paperwork. It actually was physical paper that you had to sign, and it was just the worst, most inefficient process of the whole banking system.
Yeah, exactly. So that system carried on for a long time, and it still exists today in private shares. The public markets have, by and large, moved on to digitizing everything. So that's called that process was called dematerialization. And that happened mostly in the 70s, I think, probably before most of us here were born. But I had to know that stuff in order to get set up and to run things in a brokerage. But it's not the problem wasn't necessarily the paper. The problem is the centralization, and that you have to run everything through these big, lumbering, old bureaucracies with legacy procedures and processes, and that's really what takes. That's where a lot of the money is going. A lot of the rent seeking exists there, and it costs the industry, investors and issuers altogether tens of billions of dollars a year to maintain this aging legacy infrastructure. So I wanted to completely update that with a decentralized system based on the Bitcoin protocol, but now also allowing people to register their own assets into the system where they could then move around just like cryptocurrencies could.
Wait, so are you talking like instead of a stock certificate, or what assets would they be registering?
So the system has a menu essentially, and so that you follow a script and you're registering the various flavors of equity and debt into the system. And so investors can see all of that because it's a public, transparent system, and they can send them to each other or even erase them out of the system if the company goes belly up. And so now you have instantaneous settlements and direct registration. And this is what the industry used to do, where the issuer knew who its ultimate investors were and could communicate with them directly. And so that was really good, but it couldn't survive past the 1970s. It was way too slow, way too much work. You can imagine where, millions of shares get traded a day, the amount of paperwork that would be flying around all over the place. So they fixed that temporarily by centralizing centralizing the ownership of everything in the hands of a few small companies. In the United States, if you look up something called Seed & Co., CEDE, they're a group within the Depository and Trust Corporation, and they are the legally recognized owner of pretty much every public company in the country. And then you have multiple layers of fiduciary liabilities to the brokers and then ultimately to the investors. So you have this tiered out system where everybody's in debt to one another and the actual investors are listed as unsecured creditors. So it's exactly the same system as the banking industry. When you put your cash into the bank, you're no longer the owner of that cash. You're a creditor of the bank, and if the bank goes bankrupt, you can very likely lose your money. And so in order to kind of cover that risk, the government gives you, the FDIC. But because the same risk exists in the investment industry, you also have the I forget what it's called in the US, I'm Canadian, but in Canada we have the CIPF, the Canadian Investor Protection Fund. Same idea as deposit insurance, and it's deposit insurance for people with brokerage accounts because the risk is exactly the same. If the broker goes boom and hasn't properly segregated its client securities from its own portfolio, then you run into these problems like MF Global in 2011 where it blew up and couldn't remember what belonged to who because they had commingled everything trying to bail themselves out essentially.
That sounds so complicated and hard already.
That's why you go to university and study, and they've built entire degrees around finance because the system it thrives on obscurity, and they have a whole language unto itself with all kinds of terminologies, and it's got its whole, you've got finance math, which is really just algebra, to be honest.
Do they do that to make us feel that they're the all-powerful ones?
I think almost every profession does that, to be honest.
Sasha, you're a lawyer. You know all about that.
I have noticed it a lot in the law field. They try and make everything more they use Latin instead of English to make a very simple expression sound.
The new priesthood.
Yeah, yeah.
So what's going on now with Equibit? Where are you guys at? You've given us a little background, but what's planning in the future?
We're going through the third and final build of the protocol. So we've been at this for about 2.5 years now. We built it, tested it, went back to the drawing board on a few things, built it, tested it again. Now we're ready to launch mainnet. That should be going out before the end of the year. We just finished probably the biggest job in building Equibit, which was completely swapping out SHA-2 from Bitcoin, and we replaced it with SHA-3 because it's more secure and more efficient. So we really like it. And not a lot of coins, surprisingly, are using SHA-3 yet, but I imagine they will coming down the future. So mainnet is going out hopefully before the end of November. At that point, it'll become a mineable coin. So get your GPUs ready.
Can I learn how to mine it, or do you have to be really good at mining stuff? I've never tried mining anything. I'm more curious, and I know we've got a lot of new listeners to the space. Can anybody try and mine it? What happens if you mine it? What do you get? Obviously some coins, but what does it look like?
Sure. Well, it looks like pretty much mining anything else. So you've got your rig with your GPUs hashing away, and if you're running your own node, fantastic. That's how it's going to be in the beginning. But a lot of people in our miner community have already said that they're going to be starting up pools for Equibit. So the Equibit pools will be, they'll make that work a lot easier for the casual at-home miner.
Okay, so I basically need to find a pool.
Or you can start your own.
I don't know about all that. Very cool. So where can people catch up with you if they want to, participate in the mainnet?
Well, we have a website at equibitgroup.org, and Equibit spelled EQUIBIT.
Excellent.
You just moved to Switzerland, is that correct?
Yes. We originally started out in Canada, but Switzerland being, the center of banking and finance of the world, looked to me like an ideal place to start a blockchain project that is going to have a very big impact on all of those companies.
So are you taking advantage of like the Swiss Foundation, or what kind of company did you register as?
We actually registered as a for-profit company. We've seen, over the last few years, some problems with the foundation model, and so we wanted to avoid that. And like most people, the things that are worth doing in life, and what's not worth doing for a buck as well. So we're not trying to hide the fact that we're in it to do a good job first of all, but we also want to do well personally too.
And by going there, and instead of just registering a company in Switzerland, by actually moving there, you get to take advantage of all their... actually, no, you don't get their tax haven when you live there. Is that correct? You have to pay tax to Switzerland, and they charge their citizens a much higher, like kind of similar to Canada, tax rate, or how does that work?
The taxes in Switzerland are substantially lower than they are in Canada.
Okay.
The regular corporate tax rate is about half of what Canada is, and the personal rates are substantially lower. I think the highest personal rate in Zug, just for the listeners, Switzerland is divided up into about 26 state-like entities called cantons, and they really set the policy. And from one to the other, they can be very different. We registered in Zug, which is one of the lower tax bracket cantons, and I think the personal rates top out at somewhere around 22%. So if you live there, which I do now, you enjoy those rates, and if the corporation is registered in Zug, it's taxed in Zug with those rates as well. So Zug is considered within Switzerland to be a tax haven, but there's a lot more reasons to go to Zug if you're in crypto. Zug is known as Crypto Valley. There's quite a number of incubators and co-working spaces all targeted at crypto. And I find that the companies and the businesses there are very open to crypto, particularly the trains that run around.
Cool.
Yeah, so you can actually buy Bitcoin at the same station that you buy your train tickets at, surprisingly.
Wow. Like a Bitcoin ATM, or is it implemented into the ticket machine?
It's implemented right into the ticket machine. Wow. And I was absolutely blown away to see that on my first trip there.
And did you guys get classified as a utility token there?
We did. We applied to FINMA, which is the financial market regulator in Switzerland, and they have three classifications of tokens. So you could either be a security token, a payment token, or a utility token. And they classified Equibit, and rightly so, as a utility token. And my definition.
Take note, SEC.
Yeah, I see. If it's a mineable coin, it should be considered a utility token. The framework is not exactly that in Switzerland, but I think that is one of the things they look very closely at. Is if it's mineable, it's probably a utility token, because the point of a mineable token is miners are the infrastructure, and they're not doing the work for free. They're not making those capital investments without the expectation of getting paid to basically rent it out to the network's users. And they can't take checks, so you need an embedded means to pay those guys, and that's what a utility token is.
Awesome. Well, thanks so much for joining us today. We'll be putting this out, and take a listen. Check out Equibit, guys. Thanks, Chris.
Thank you.
Hey there, it's time for the show, the Tatiana Show, where you make friends and talk life and crypto. We gotta think and reflect and use lots of intellect with our hearts when we work together. I know that it can be so hard out there, looking all around and saying that life ain't fair. So that is why we will fight and stay up late at night, listening to the Tatiana Show.